everyone, welcome back to my YouTube channel. Welcome back. Today we have more update coming out from the market. A lot of stuff are coming out and we have major update that we just received from the market. Okay folks, so let's look at the current global crypto market cap sitting around $936 billion here. And we have seen a 1.43% increase within the last 24 hours. Also, let's look at the crypto market volume in the last 24 hours is down to 9% this morning. So right now, it's just sitting around $65 billion here. And the majority of the trading consists of stablecoin, which represent nearly 92% of the total volume. And Bitcoin dominant just gained another 0.51% within the last 24 hours. Pretty exciting stuff coming out. Okay, we have some crypto coin that are trending right now. I really don't know about Prosper that much. Haven't done that much of research on that crypto asset, but very likely not really interested. It's down more than 17%. Let's look at Bitcoin up more than 0.84%. XRP have been outperforming the market recently, and if you haven't paid attention with their market cap, they haven't performed very well though. So they are down by 3.29%. Okay, folks. So let's look at Bitcoin for now. Where is Bitcoin sitting right now? So as we have mentioned and we have talked in the past, currently Bitcoin major support level is at 20K. And right now Bitcoin is failing to hold at 20K. So we are expecting more pullback within the market. Right, when the next couple of weeks, there's not gonna be a lot of bull run since people are very pessimistic with the economy, as we are seeing growing sign of the economy begin to lag, which is sound alarm for the American people. Let's look at XRP. XRP just lost their place to Binance. So right now, just it's gonna be a fight between XRP and Binance. So that's what we are expecting from the market. Cardano, not that much of a big deal coming out from the market. Dogecoin and Shiba Inu are just for fun. So not a lot of movement that we are expecting from the market. Okay, folks, so let's look at our fear and greed index as of right now, where we have scored. So currently, though, we scored 23 points, which means that crypto investors are at extreme fear of the market due to rise in FUD, folks. Fear, doubt, and uncertainty. That is what we are seeing. And the score was the same was yesterday. And it was a bit lower than last week and very low than last month. So that's what we are seeing. Not that much of a conflict in the market. So more bears are coming out than expected. But let's look at our market future, what we are seeing from the market right now, folks. So there are not a lot of movement within the market. So very green during this time. But however, FUD is still there for fear, uncertainty, and doubt. And American people are doubting the U.S. economy, even though we have seen the slight greenish. However, we could see red within the near term, and we are expecting an economic slowdown within the United States, and people are embracing that concept here. Let's look at the global economy. It's a bit green, and we have some regions that are in there red. So we are looking from the European Union, from South America, from the Asia market, and that's what we are seeing from the market. So a bit green lately, a bit green. So that's what we see. So there's going to be a lot of recovery here. But however, there's no guarantee that the market will stay green within the next couple of weeks, as the Federal Reserve continue to raise up their interest rate. So that is a major threat to the U.S. economy. Okay, folks. So just recently, the Federal Reserve announced another 75 basis point hike, and economics are very concerned with how the U.S. economy will respond, because right now we are hearing more news from tech sector, especially tech companies, are laying off significant chunk of their employee. That is just what we are seeing. They are announcing more cut measure in order to survive amid this ongoing crisis, which is inflation. And this is just a problem here. So the Fed decided to raise up another 75 basic point, and we are expecting for that. And the Fed gonna raise up another 75 basic point. We do not know. This is our third time of hearing the Federal Reserve raising up another 75 point, and they say there will be place significant pain on the American people. And the move arrived a little more than a week after a higher than expected inflation report revealed that prices rose slightly in August, worsening the cost woe for U.S. households and sent the S&P 500 tumbling for a worst day of 2020. So the Federal Reserve right now is really position themselves in a very tight spot in order to enact more hike rate in order to tame against aggressive inflation. And people are very concerned with how the U.S. economy will respond as more tech company and more company continue to laying off their employee, which is a red sign here. Okay, folks, we are going to hear from JP Morgan CEO Jamie Dimon, and he is raising the possibility of the U.S. entering an economic disaster as painful inflation continues to rise. And the Federal Reserve is not backing down, folks. And he did spoke on Wednesday and brought it towards Congress by saying, hey, major economic storms are coming and we are expecting for a crisis, an economic crisis, as the Federal Reserve continue to raise up their interest rate. And also, he had just complained in the fact that inflation will continue to impact the American people financially. And we have seen that, and the Federal Reserve has acknowledged the fact that inflation have a significant impact on the American people and really limit their ability to spend and to purchase goods. So things are not looking good, and they say the U.S. today is a classic tale of two cities, a bear and a bull market, and people are just doubting the strength and the resiliency of the U.S. market, which means less of conflict, more sell-off, and let's look up here. People are now concerned. People are now assuring that the fact a recession is likely to happen in 2023. And the Federal Reserve could trigger one without causing a financial pain, which is impossible here. And during the Jackson Hole meeting, the Federal Reserve did announce that they plan to raise up another big rate in order to tame inflation, and they had acknowledged the fact that they will inflict financial pain on the American people. And yet there are mounting warning signs, employment gain or slowing saving cushion are wearing thin, price increase remain high, and corporate profit, which has stayed strong, appear to have softened, underscored by a bleak FedEx warning last week that contributed to a massive stock market sell-off. So, aggressive Federal Reserve interest rate hikes designed to tame inflation are likely to take a bigger toll on growth in the coming month, and we are seeing more signs of a recession being grown by the Federal Reserve, and things are not looking good, folks. And right here, so according to Walter Kluwer Blue Chip Economics Indicator, they believe there is a 54% chance of a recession next year, according to their average estimate, up from 39% in the June survey. So this is a major concern. This is a major concern. Okay, folks, so in the end of what are my thoughts with the U.S. economy right now, people are very pessimistic with the U.S. economy as the Federal Reserve continues to raise up another 75 basic point, and we are prepared for an economic slowdown within the next couple of weeks. So be prepared for if the U.S. enter a recession and things could possibly gone wrong. Thank you, and have a nice day.